don't even know what it costs. Yeah, I hit the ground and it go off. Yeah, hit the ground and it go off. Yeah, run it. Ooh, I really feel it's my time, think it's my year. Yeah.
Boom, what's up? Good morning, everybody. Happy Tuesday. Welcome to the morning show. I'm Spencer Israel. I've got JC Parets. I've got Steve Strazza. Man, we got to go in today. I am super excited for our guest at 9 a.m., Michael Batnick, Ritholtz Wealth Management, proprietor of the Animal Spirits podcast. He will be on the show in about a half hour from now. But before that, we got a lot to get to. We got to talk Apple. We got to talk about the Apple Vision Pro, the $3,500 set of goggles, I guess you can call them that, AR, VR goggles. We'll talk about that yesterday. That was pretty cool. We'll talk about crypto and Binance. We have some earnings on our mind. We'll have Kimmy Sokoloff on the show at 9:15. Patrick Donner-Willer from the Chart Report on at 9:40. So a lot to get to. If you're watching on YouTube, smash that like button. It's the one that looks like that. It's the thumbs up. Yeah, that's right. All right. They're here. JC and Strazza. Let's do this.
What is up?
How we doing?
Good morning. Good morning. How about those Apple? What is it? Apple Vision Pro? Is that what they're calling it?
Did you guys watch at all?
I did. Yep.
I saw the first 3 minutes of the video you sent me.
Did you
Strazza calls me freaking out. Like, bro, did you see this? See this? Sick.
It's incredibly cool. Basically, you have the Apple operating system interfaced in front of your face, but you could still see the real world. And if you turn your head, you basically turn and look at a different app, and you could select it by going like this with your finger. I swear.
All right.
So as long as I can strap an iPhone to my face, I'm in. Just inject me with it. Just give it to me. I'm going to wake up and be in the metaverse.
Here's what we have to keep in mind. This thing is going to get better and better and better every year, and probably won't be anything, that really hits mainstream for several years. It's going to get smaller and smaller and more comfortable, and they're going to figure out all that stuff. But for version 1, wow.
That's what Brett Conrad said. Brett Conrad said he's going to wait for the version 2 or 3. That's his plan.
That's the best move for most people.
Is that like the responsible veteran move right there, is to wait?
Yeah, you have to give Apple the benefit of the doubt that they're just going to improve, any little, product efficiency over the next few years. That's what they've done with every other product forever now. So excited.
Let's table the rest of this, and we'll talk about it throughout the show a little bit later. JC had his bi-monthly, what do you call that? Evening chart session.
We call it a strategy session, Spencer, here at All Star Charts. Okay. At the beginning of every month, we are blessed. We are so blessed to have a fresh batch of monthly candlesticks to dive into. Loads of information there, and we go one by one with premium members of All Star Charts, and that just happened to be last night. So should we give them a little sneak peek at what we discussed?
Just a taste. Just a taste. All right.
See how it feels. All right, let's start here with slide number 2. And there it is. And to quote the great Willie Delwich, what did Willie say? Willie says you need bulls to buy stocks and to have a bull market, right? You need bulls. And sentiment has a funny way of following price. We've seen it time and time again. And what are we seeing here? We're seeing the average bulls and the average bears between advisories and individual investors, right? So this is the Investor Intelligence poll, as well as the American Association of Individual Investors. So advisories and individual investors combined, really, historically reliable contrarian indicators. When they're all bearish, it's probably time to be buying. When they're all bullish, probably time to start selling. Nevertheless, Willie's right. You need bulls in a bull market to buy stocks. And what are we seeing? We're seeing the average bulls starting to increase. You're seeing more and more bulls as the price of the S&P and the NASDAQ keep hitting new 52-week highs every month, right? Literally back-to-back months, highest closes in a year. And people are starting to notice, so you're getting more and more bulls. You know what you're also seeing? You're seeing fewer and fewer bears. Funny how that happens. When we had peak bearishness, that was exactly the time to be buying stocks. Now that all these indexes are making new 52-week highs, all-time highs in some cases, people are starting to notice, which again is perfectly normal. We're coming off some of the most depressed levels of sentiment that we've ever seen in history, pun intended, on the depression. I think people are just angry. And, you know, the bet that we're making is the rotation. Take a look at the small cap chart next. This is the Russell 2000. You know, many people remember back in 2018, over on the left of that chart, we were very, very bearish. You know, I thought that we were going to absolutely collapse. That was a great quarter, the fourth quarter of 2018 for us. We got back to those levels in 2020, also getting short at those levels, not knowing that there was like a pandemic ahead of us. We were just selling short because the data suggested that that was the best move. And then we later found out that there was a massive pandemic and we're going to get locked down and all these people were going to get sick, et cetera, et cetera. But nevertheless, it was just running into form of resistance. It really wasn't that big of a deal. And then ultimately after COVID, we broke out. Then last summer, we got back to those former levels, successfully retested those lows that was turned into support, which was former resistance back in 18 and 20. We call that polarity. And now more recently, we got back to those levels. That's 169. And the bet that we've been making over the last couple of weeks is that money's going to, if we basically reverse engineering the bull market, right? And if this is a bull market, what's likely to happen next? As opposed to, is this the best chart that we should be buying right now? As opposed to that simpleton mindset, to take a step back and just reverse engineer what a bull market looks like. If that's what this is, you're going to see rotation into small caps most likely. Industrials too, for that matter. So that's in fact the exact bet that we've been making. We have been betting, we put on a bullish risk reversal a couple of weeks ago, selling short the October 155 puts, taking that cash and buying the out of the money 190 calls in IWM in October. Again, really just a bullish bet. That's in the options market because it's much more aggressive, much more leveraged, well-defined risk. I liked all of it. If you're interested in the common stock, you know, 169 on the ETF is the level. If we're above that, I like it long. At the very least, I think we go to 200, probably much higher than that. When you zoom out, this is just a series of higher highs and higher lows as far as I'm concerned. We continue to see former resistance levels turning into support. We see that again and again. So our bet is that this time is going to be no different. And then when you look at small caps really in this range since last summer, you're seeing large caps already breaking out. So if large caps are any kind of leading indicator for these small caps, you know, I think it's time to be rotating into small caps. And then when you look at the ratio between the small cap Russell 2000 and the S&P 500 large cap index, what do you see? We're back down to the COVID lows. So if there was ever a time where small caps were going to start to outperform their large cap counterparts, this would be a perfectly logical place for that to happen. And here we are, right? Back down to those lows, right? Sean just updated us on this particular trade that we already were able to close out all the short puts and have already sold half of the call option. So now we have unwound any risk that we have in this trade. We are officially a risk-free trade. We cannot lose. The question is, how much money do we make? Or do we break even, right? It's either going to be a break-even trade moving forward, or we're going to make a ton of money, or we're going to make a little bit of money, or we're going to make a lot of money, or we're going to make a shit ton of money. Any of those options is good for me. What's that? Somebody chime in? No? Okay. And some people are already like, oh, JC, but the small caps are underperforming, blah, blah, blah. It's like, well, here's a list of small caps that are all hitting new 52-week highs. So your small caps might be underperforming, but my small caps are outperforming by definition. And by my small caps, these are the ones on this list. I don't think I own any of them. Do I own any of these? I own one of them. But nevertheless, this is a list of stocks in the small cap space that are already making new 52-week highs. I'll just give you a little sample here. Arcosa, ACA, it's an engineering and construction stock. This is an industrial stock, and putting in a nice base over the last couple of years, breaking out. You know, if we're above this 69, I like it long. Target up near 84. Just a little tasty taste, no big deal. So that is a quick sneak preview as to what we discussed. Ooh, I had one more chart that I wanted to show you guys. In bull markets, you know, what you tend to see is correlations coming off amongst S&P components. When volatility spikes, when, bear markets, correlation spike to 1, right? That's what you see. And then in bull markets, you see those correlations coming off. And that's exactly what we're seeing. Here's a 3-month correlation between S&P components making new lows. Here's the 6 months correlation making new lows. And then here's the 12-month, 1-year correlation really rolling over. This is the slowest one, but we're actually seeing that. So just classic characteristic of bull markets. And if you are not a premium member of All-Star Charts, put in the access to conference call slide there quickly so that they can see where to email us, slide 18. If you would like access to last night's monthly charts strategy session, email info@allstarcharts.com. Chat with Mary. She'll help you join the Cool Kids Club. It is pretty cool, I must say. Pretty cool, Strazza.
You know what you can also do?
What can I do?
Scan that QR code.
Ooh.
Technology.
Listen, I don't want to scan anything. I just want to look into my goggles and just press into the air. That's what I want to do. Can I do that?
Yeah, you actually can.
Not yet.
When can we buy these things? This is all I want to talk about.
When are we going to buy them?
What they say in the fall, right? I think that's what they said.
And why do people get so angry? On Twitter, people are like, "Oh, if people buy this $3,500 device, I want a recession to last forever." It's what? I don't what are you so angry about, bro? Fine. If you don't want to spend $3,500 on this, then don't. What does that have to do with anybody else? If you don't want to buy it, don't buy it. Who gives a shit? I promise you other people will. I definitely will.
I saw some stuff on Twitter where just talking about, the fact that they're probably going to crush it with this product. And somebody said to me, starts talking about recessions and, the consumer is not going to be willing to spend. Has Apple not proven over the past 20 years that whatever they make, people are going to be more than willing and eager to spend money on? Have they not proven that for decades now?
First of all, this whole consumer's dead thing is bullshit. Home builders keep making new highs. What what data are these people looking at?
Listen, they can point to things. They have their list of evidence.
What?
And we have ours.
What?
It's not great. We've talked about
I'm not to get all fundamental, but for everybody looking for a job, there's 2 job openings, right? Which is ridiculous, right? Home builders keep ripping higher. I don't know.
Do you really want to get into this? You're really because the wage growth. The issue is wage growth, JC. Okay, we're in an inflationary environment and wages haven't kept up. They have actually increased more for the smallest decile, whatever you want to call that. But
you know what I think is funny, Spencer? You know what I think is funny?
What?
I think it's hilarious that Germany announced that they're in a recession and the stock market in Germany is making new 52-week highs. Oh, sorry. Stock market in Germany is making new all-time highs. Sorry. Sweet recession,
right,
bro.
No one is saying that we're in a recession.
Nobody is saying we're in a recession. Nobody.
All right, maybe some people are.
You might not because you hang out with us every day.
You
hang out with us every day. So if you said that, you're gonna get smacked around.
Wait,
you don't want that.
Do you guys want to watch some of the Apple thing from yesterday?
Can we? Is that a thing?
Sure, why not?
Yeah, put it up.
I turned the sound off so we can talk over it, but just
this is great.
Yeah, and just you can see watch his hand here coming up. He oh no, it's buffering. Oh, there we go. He it's being a little choppy for some reason. That's weird. That's weird.
So because I have 500 windows open on my computer.
I also have 500 windows open on my computer, so maybe that's why.
I'm just gonna yell at us.
I have had issues with this video specifically this morning, so maybe it's an Apple thing. I'm not sure. Whatever. If it comes back, I'll bring it back up. But the point is, it's extremely cool.
If you haven't seen it, go see it because it's pretty cool.
You can change the resize the screen by just moving your hand, right? In space.
Dude, it follows your eyes.
Right.
What it knows what you're looking at, and the app icon,
Yep. The panorama view was freaking ridiculous. Okay, you take a panorama photo on your phone, you upload it to the goggles, you bring it up in front of your face, and it's you're there. It's wild.
And then so are people going to be able to put on these goggles, and then I'm going to be in their living room giving a presentation about charts? How far away from that?
No, now.
Now.
Am I gonna need like a fancy studio that has like these 3D things around me, or no?
No.
Like, do I need to put like, you know how they put like the dots all over me? You know what I mean?
Yeah, the green things. Yeah.
yeah.
Strazza, JC just wants an excuse to put dots on his body and dress in a skin tight suit, I think.
Giancarlo wants to put dots on my body. He's always touching me in odd places. He's sticking things in my butt, like these
Okay.
you know, these
Okay.
microphone things in my pockets and my butt. He touches very uncomfortable.
Does do that. He's touchy feely with the mics. Yeah.
Yeah, he's a little touchy feely, Giancarlo.
I think I saw the video of the 20 of the people reacting, the crowd reaction to the price tag. You know, $3,500 is not nothing. I think most people will do what your friend is going to do, JC, and just probably wait it out a little bit, wait for the next version.
I mean, that's the prudent thing to do. Brett Conrad saying he's going to wait for version 2, version 3. I'm not. I'm just going to get it. Can we throw up the Apple chart, slide 1 quick?
Yeah.
Throw that up because I think that's worth a look here. You know, here we're looking at the market cap pushing up against 3 trillion once again, and you know, sort of reversing yesterday at those former highs. You know, we're at the upper end of the range. Is this the breakout that we've been waiting for in Apple? You know, what is it? 2 years of consolidation, right? Basically a year and a half of consolidation. You know, stock right now pre-market is flat pre-market below 180. So below 180, there's really not much to do. But Strazza, I like buying a breakout above 180 in Apple. I'm not convinced that it's going to happen today or tomorrow.
Yeah.
But my suspicion is it probably happens sooner than later. Nvidia ripped right through those former highs like it wasn't even there. So, you know, and I understand, yes, AI and different circumstances. Yeah, whatever. The point is Nvidia didn't really respect those levels. So how much is Apple going to respect them is really my question. And I did get a text message yesterday from my high school buddies about Apple stocks specifically. And these were the same high school buddies that were texting me in December of 2017 about which cryptocurrencies to buy. Not whether or not they should invest in cryptocurrencies, but specifically which ones to buy. Same friends. So just throwing that out there. I'm not saying that this is an epic bubble, but it's probably not a coincidence. And there's still resistance at 180. So I don't necessarily think there's much to do here.
I have some anecdotal sentiment. I was golfing with a new friend yesterday afternoon, and he was asking me, how do I invest in AI? And the answer I gave him was Apple, Microsoft, Google, right? And he was so disappointed, as if like he already knew about those stocks and I was giving him nothing new, you know?
Right. He wanted some sexy, like small cap that's like, yeah.
It was so disappointing. I thought that was really interesting, you know? He's like, Apple? That's how I'm really? Probably.
You told him Apple, you didn't tell him Google or Microsoft?
Yeah, I told him Google, Microsoft, Nvidia, Apple. I told him buy the Qs. If you want to invest in AI.
Yeah.
Wait, Strazza, I'm so glad you said that because somebody on Twitter mentioned this yesterday. Do you know how many times Apple mentioned AI in their presentation yesterday?
How many? 0. That was definitely on purpose.
Dude, they're such bosses. They're gangsters.
They're such bosses.
Yeah.
Bosses.
If you think that wasn't by design, you're crazy, right? But good for them.
Good for them. Seriously, good for them.
The other hot take about this too is a lot of talk about Meta versus Apple, right? Like which one of these devices is going to be the winner? They're both going to win. In fact, the fact that Apple just came out and made a big deal about some sort of VR or mixed reality set is the best thing that could have happened to Meta, because they're legitimizing this new space, right?
Yeah.
There's nothing better that could happen to Meta. This is a net plus for both of them. The price points couldn't be more different. There will be room for both of these guys to thrive in this space. And I think you're looking at two.
Yeah, you got like the Google Android, and then you got your iPhone. So like this is the same thing. Like the Facebook is like the piker version of the Apple goggles, right?
And I'm sure there will be a huge piece of the pie for that version. You know what I mean? The fact that Apple's coming up here making a huge deal, their biggest product announcement in almost 10 years, that's the best thing that could have happened to Meta, because they've been sitting there with this whole metaverse AI thing for a year, 2 years now, and nothing's really happened with it. Now they have the biggest company in the world, the best innovator in the history of the market, coming and saying, yeah, this is real. This is where we're headed to.
Anybody know when we could buy it?
No idea.
Nobody knows?
Some people.
Yeah, no, the fall. The fall.
Right. Fall? Okay, that
Yeah.
makes sense. They create the hype now, right? And then they ramp up production, and then they get the product ready for the holiday season. That's always been their kind of strategy.
So this is going to be one of those things where for Christmas everybody wants one of these things.
That's it. And if you look at their quarterly sales, they just blow out Q4 every year for this reason. If you look at a quarterly trend, it's very uneven because you get that huge.
Is there a waiting list?
I'm sure there will be. I have no idea. That's another thing I heard on Twitter. Somebody's literally said to me, I'm not seeing long lines at the Apple store anymore. People, times have changed. Like JC said, nobody's waiting in line anymore. We have the internet.
I never did.
And it works.
Lines are just not for. But you know what? People love waiting in lines. It's like a real thing. Like people love waiting in lines. I remember I was in Dublin. Was I in Dublin? I'm pretty sure I was in Dublin. I was at the airport, and it was like the longest line.
He tells stories about waiting on lines. We need a segment. We need a bumper for that.
Dude, you should have seen this. This is the longest line ever at the airport, and there's like signs everywhere that said to log in on the app, and you don't have to wait in line. So we did, obviously, and we flew right in. And people would just like ignore it. And I'm like, how come nobody's download? Does it not work or something? And I'm like asking people. It's like, oh, no. We just like waiting in queues. Like they were literally telling me that. It's like real. Like you go to like the amusement park and there's like 10 different ways to get in. And you have like one has no line. And then the longest lines is where people see a line and they just get in the back of it. Like people just love doing that. I'm the opposite. I see a line and I just walk up to the front and pretend that, oh, I didn't know that I wasn't supposed to be here. Oh, sorry.
You're that
Wait,
guy.
I'm that guy.
My mistake. I get Rahul in the chat says that Apple say it'll be early next year. So my mistake.
Oh, that is some bullshit.
That seems wrong. Steve is right. They like to have their shit ready for the holiday season. I don't know.
Yeah, it is now. It is June. I gotta wait 7 months for that. I don't want to do that.
Hold on. Throw up my tweet quick. Let's talk about this.
Yeah.
I did some fundamental charting yesterday. JC loves a good bar chart.
Is that a thing?
Mm-hmm. Yeah.
Fundamentals charting.
Yeah. One sec, Strazza. I got you.
So we basically shout out to our friends at Stratosphere. They do such great work over there. I can overlay segment revenue data with standard fundamental data. So
your friends at Stratosphere to make the Y and the X-axis bigger, because for us old folk, we can't read that shit.
Working on it. So yeah, that's coming. But you're absolutely right. That was one of my first comments. But anyway, check out how cool this is. So in orange here, this is Netflix total revenue. I know it says streaming revenue, but guess what? Their DVD sales are not material at all. So this is basically the total revenue. Apple has 3 non-core businesses, right? Because iPhone is core, and now services is really core. From my understanding, based on materiality, is very core. They also have MacBook sales, iPad sales, which they break out separately. You're seeing MacBook in purple, iPad in green, and then wearables, which is really the watch, the device they launched yesterday, AirPods. It's like a catch-all, but it's really AirPods and watches. All 3 of these non-core smaller revenue centers are basically bigger than Netflix's annual revenue. I mean, this is amazing. We're not talking about their main business here. We're talking about their leftover business. No? 30-40 million from each? Or 30-40 billion per annum from each one of these revenue centers? That's ridiculous. This is a mega cap company, even if you stripped out the iPhone and the services. No?
3 trillion.
I mean, but this is why. I'm explaining why that is. I mean, these are big numbers. The company puts up big.
What's the over-under on how long it takes for them to get to 5 trillion?
I've already told you. I think it happens this cycle.
What does that even mean, this cycle? This could be a 10-year cycle.
No. This smaller cycle here. So whatever.
Are you saying 5 trillion market cap in 2023?
No, 24, probably.
24. You heard it here first, folks.
We're just breaking out, right? We're just making new all-time highs.
We haven't even broken out yet.
Right. So I think it hits a price target or 2 from here, and it probably gets close to or 2.5 trillion.
All right. I'm honestly, the fact that we're not getting these stupid things for another 6 months, I'm done with this conversation. Can we talk about things that are moving?
Yeah.
Can we talk about the movers?
Yeah, some movers and shakers. Spencer,
movers and shakers. All right, what's moving?
Crypto. Crypto is the answer.
But tell me what happened here. Tell the people what's going on, please.
13 counts. The SEC is suing Binance, saying, "Yeah, you guys ran an unregulated exchange here in the U.S." And let me tell you, some of the quotes in this charging document were they had some doozies in there. I think everyone's favorite is they had the chief compliance officer in 2018 saying, "We are operating as a fucking unlicensed security exchange in the USA, bro," in an
Who said
email.
that?
Binance's chief compliance officer.
I mean, didn't we all like? I mean, I'm not like an expert when it comes to like unregistered securities or whatever, but didn't we already know all this? Like, isn't this we knew this, right? Like,
So
why,
here's the problem. Here's why the SEC looks ridiculous right now. That in these things, so they came after Coinbase as well. It's not just Binance; it's both of them, obviously, right? Same business. So in SEC's complaint versus Coinbase states they've been acting as an unregistered broker since 2019. Okay, the SEC has to sign off on going public documents for these companies, right? Coinbase came public in 2021, and the SEC said that's fine.
and they haven't changed their business at all.
And the SEC hasn't passed any new regulations either. They've done nothing on it. So if they were an unregistered broker, why did you let them go public? It's really crazy. And that's why these guys are absolutely freaking out. Can we just read some snippets from Binance's reply? Because they wrote like a scathing response to the SEC, which I think is really interesting. Basically saying like, come at us. It's not your jurisdiction. We're not a U.S. company. So this is going to get interesting. And as a Coinbase shareholder, this is terrible. This was really the worst case scenario in my mind. You don't want to own a company that the government doesn't want to exist, right? We have a million examples of that over time. Silvergate and Signature Bank were just some really good ones recently.
Yep.
This is not a game I want to play, so I'll probably be looking to get out. You don't want to fight with the SEC. Brian Armstrong has done a great job, but listen, the chips are stacked against him. This is a real tough one.
Yeah, if you're going to own Binance, let it get back above 300, 305. Let this be a failed breakdown, 100%. Same thing with Bitcoin, by the way. If Bitcoin can get back above 27, we start seeing 27 again on Bitcoin, I think it's ripping through 31 on its way back up to 65.
You know what else is interesting, though, JC? I'm not trying to change the topic from your beautiful technical analysis. Twitter is sponsoring and promoting all these tweets that are basically defending Coinbase and Binance right now. I don't know if you see them on your feed.
Well, aren't they all friends? Like they're all in cahoots. All these Silicon Valley guys. These are all of Elon's old buddies.
Well, think about what Elon loves and think about what Elon hates. He loves crypto, loves the Doge, and he hates the SEC. Yeah. So he's obviously on a side here, and I see it in the algorithm. So that's pretty cool.
Yeah, good for him. Honestly, if I owned Twitter, I would promote my friends' tweets and objectives if they were my own as well. I mean, I don't blame him. That's what he should be doing. Why else would he buy it? He doesn't need these aggravations. Good for him.
Yeah. Oreo gameplay. Binance is unequivocally not invested in Twitter. Just to be clear. I don't know if that was
who's not invested in Twitter.
I'm just responding to the chat here.
Oh. All right. So what else is moving other than crypto? I mean, Bitcoin's flat on the day. Everything seems to be yesterday. What else is going on?
Let me just finish on this. Sorry. There were some really interesting claims that the SEC made about Binance in terms of them not segregating customer assets. And that is a real serious offense. Right? You don't want to do that. And I just want to be incredibly clear with Coinbase, that's impossible because they file a report called a focus report every single month with FINRA, where they literally say, here's where our customers' money is. Binance has skirted those regulations and intentionally does not file that report. That's why they're based offshore. So Binance is in a lot more trouble than Coinbase, in my opinion here, because Coinbase, as much as they want to shut down, it's going to be a lot harder to do. I think they're going to have trouble pointing to illegal activities with Coinbase because they've been incredibly transparent. Binance, if they can prove that they have jurisdiction to do it, they'll be able to shut them down because I think some pretty sketchy things did go on there. And there's just been no reporting around it. So
yeah, it's the commingling of assets. That's where is the problem.
They've commingled for sure.
Yeah. All right, guys, 9:00. Guess time?
Michael Batnick. Let's do it.
All right, guest today is a good one. Michael Batnick, managing partner of Ritholtz Wealth Management, also co-host of the Animal Spirits podcast and all the great shows on the compound. Let's get Michael on the show right now.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
What's up, boys?
Batnick.
Look what he brought along. Dude, you have the best gear, Batnick. Can we just start there? I try and model my style after you. What do we have to do? Because you've clearly made it. What do we have to do to get a morning show shirt made by Tropical Bros? Because I think you guys just broke like their e-commerce site.
Oh, yeah, we did cause supply chain disruptions, but guys, I'm rocking your swag today. I mean,
I like it.
Love it.
Sell puts naked.
Feels good, looks good.
You got the reverse thing going.
What's
right?
that?
Nothing. We'll figure.
Oh, my camera. I think you guys. Yeah,
It's all good though. You look good though.
Thank
You
you,
look
fellas.
better when you're mirrored than you do normally. Has anybody ever told you that?
No,
You look more handsome.
the balls are symmetrical, so it shouldn't make a difference.
But it does.
Okay.
You know, it does.
I
All
told
right.
you
So
he needs to get a pair of bird dogs.
hold on. I want to talk about the debt ceiling
talk
and
about
GDP growth.
Stop. No, you
Can we
don't.
talk about
You don't. You don't want to talk about it any more than I do.
Can we talk about we're not allowed to talk about tax loss harvesting, Josh. I want to have this conversation with you about tax loss harvesting, and Josh says that we can't do that.
That's super boring.
I want to
I
know.
know, but I'm very interested in it. So that's another conversation for another day. Hold on. Strazza doesn't like it when I steal all the questions when our guests come in. So but I'm gonna do that. Can you just tell me what's on your mind? Like, what are you thinking about in this market? Here we are, early June 2023. We've been in a bull market for almost a year. I don't know if you guys watch the Compound and Friends, but we've been talking about that for quite some time. Have you like when you look at the markets, you wake up, you're chit-chatting, with your investment buddies at a bar or whatever. Like, what are you talking about? What are you thinking about?
Well, JC, I like to keep things simple. So here's where I'm at with the market. I'm reminded of where we were at in the beginning of the year. Historic pessimism, whether it's economists, money managers, retail, hedge funds, everybody expecting the worst. And that did not come to pass. And so we bottomed in October, as you remember, and momentum started drifting higher, took hold. And then the fundamentals confirmed, right? We were expecting negative 6% earnings growth, and it was only 2%, and positive revisions, and the world did not end. And I don't think a lot of people foresaw the economy accelerating into rising interest rates, earnings hanging in there, layoffs stabilizing, inflation coming down, jobless, the labor market's still incredibly tight. So things have not gone the way people expected. And when everybody expects one thing and is positioned for one thing and the opposite happens, you can get a rally like this.
How about what you're seeing now? Because you talk to a lot of people. We get certain sentiment reads, but we're kind of hanging out on Twitter too much. So, who knows how much you can weigh that. You're talking to real investors every day. What are they thinking about? What are they talking about? Are they asking about the debt ceiling? Are they talking about growth stocks? What's the sentiment read from your world?
Yeah, so I don't want to just pretend that I know what the sentiment is, because I'm not talking to clients every day. So I could give you an answer, but I would be made up. So I don't want to do that. I get the sense, and I'd love to hear your guys' thoughts. I get the sense that not too many people are particularly enthralled with this rally. Not too many people have benefited from it. At least the people that are vocal about it. People seem to be in disbelief. People seem to think that another shoe is going to drop. And I understand all of that. And I understand all that, especially if you've been underinvested.
I think you and Ben were making the point on the show last week about how when breath is narrow like this, it doesn't always, speak to some sort of impending crash, but sometimes it just speaks to some catch up, or some rotation.
So intuitively, I was always, if you had asked me, is narrow breath bad or good for forward returns, I just would have said bad, right? Because as soon as the generals start leading, once they shuttle the soldiers or whatever that line that I'm butchering is, just intuitively, that made a lot of sense to me.
Yeah, but it's what else is happening, right? Just because narrow leadership doesn't necessarily mean widespread distribution. You can have widespread distribution while you have narrow leadership.
True. Like
in 2021, you had that.
Yeah, and
you don't have that now.
And in 2000, you had that, right? And so that's not what's happening now. It's a great point. But so somebody did a great study showing what happens when there's like extremely narrow leadership to when there's extremely broad participation. And broad is better, right? Like when every stock is like that, you want that. But now high concentration does not necessarily mean, holy shit, the world is going to end. I think historically it's more like, and how many blog posts, how much ink has been spilled over the last decade about narrowing breadth, and it almost always resolved itself to the upside, where the rest of the market that is not participating catches up. So if you break down the S&P 500 by market cap decile, right, the top 50, next 50, next 50, the top 50 are up like 11% on average year to date, and the rest of the market is flat, up 0.7, down 0.1. It's all in the top 50. The rest of the market historically, at least in recent history, has caught up, number one. Number two, think about the companies that are leading. Apple, NVIDIA, Google, Netflix, like Meta. Why is this a bad thing that the best companies in the world are leading the market? JC, Steve, you got any thoughts on that? Like, why is that a bad thing?
I'll throw something else in there. These companies like Amazon and Meta and Apple, they might be one company, there might be one stock, but they got a shit ton of stuff going on. Like AWS is like an S&P 100 company on its own. You know, Apple's EarPods are bigger than Netflix, you know, so like there's a bunch of businesses within these companies. So yeah, I don't think that that's a negative at all, number one. Number two, what's wrong with your best players scoring a lot of your points? Like that's pretty normal,
no, Jokic
right?
at 40. Although actually that's a bad example, but you get the point.
What's
for me, like we have to talk about what does it mean for most investors, right? So narrow leadership, fine. But what stocks are leading? It's the most important ones. Like this could be a lot worse. I could be telling you that all the ARC stocks are leading.
Right.
No,
oh no, the best stocks are winning. Yeah, they've been winning for the last decade. How many times have we done this?
Yeah, by the way, also, Batnick, in the last 6 months of last year, because the market, you talk about how the market bottomed in October. I've been arguing the market bottomed in June, because that's when the new 52-week lows list peaked. By the time October came and the S&P and the Dow put in their final lows, there weren't any stocks left going down. Nothing, everything was already going up by then. So internally, the actual market of stocks bottomed a year ago, and then those indexes put in their bottoms in October. So in the back half of last year, everything was working except for these mega cap growth stocks, right?
Amazon bottomed in October. That stock fell almost 60%.
Facebook as well bottomed in October. As soon as interest rates peaked, by the way, probably not a coincidence. But everyone was complaining that these big stocks weren't working. And now this year they're complaining that they're working too much. So for me, I just think that they like to complain. So we saw the sector rotation that we needed coming into the year. The only ones not working started to work. And now in a similar fashion, now we're looking for sectors to rotate once again. Are we going to get back into those cyclicals, the industrials, materials, energy, financials? Are we going to get that rotation this summer? Do you think it started last week?
I'm going to answer a different question that you didn't ask, and then I'll come back to that. I think it's important to keep in mind for the listeners and viewers. The people that you talk about complaining are the people that leave Yelp reviews, right? Most of the world is not miserable. It is a misrepresentation of social media. The people that you hear about are the people complaining because bad news spreads. We know that. I don't think the average investor is as miserable as we're making it out to be. I don't think most people are as miserable as they are in social media. So back to your question, did the rotation start last week? What rotation are you talking about?
Small caps, ARC.
Yeah.
Well, I think that's going to depend a lot on regional banks.
Okay, but how many regional banks are in the industrial sector?
Fair, but in the Russell, they're a huge component.
Yeah.
Listen, if rates are going to come down in a material way here, you're going to see regional banks rip.
Rates come down?
I know that's confusing to you, but that's the situation right now. Their unrealized losses that are on their books right now will go away very quickly if interest rates can come in.
Steve, sorry to switch the topic, but JC, I'd like to ask your thoughts on this. The dollar has been strong while stocks have been strong. What do you make of that?
Yeah, for a few weeks, right? For a month or so. Yeah. I mean, the negative correlation between the dollar and stocks in general has been very strong, really since the Trump election. And we've seen that negative correlation. So, the question becomes, are we impressed with the resiliency in equities despite the bounce in the dollar?
That's my bias.
Or are those correlations now changing, right? As bull markets progress, and you can argue we're almost a year into this bull market, you're seeing these correlations dissipate, right? You're seeing the correlations among S&P components completely falling apart. So would it also make sense that those intermarket relationships also become less strong? That's the other argument. I'm not convinced of that. Our friend Mark Dow, that's his argument. I respect it. I'm just not convinced of that. I think this might be maybe something temporary. And like you said, you agreed, I'm more interested in the resiliency of equities despite that stronger dollar. I'm more interested in that.
You were vigorously shaking your head.
I mean, it's very unlike JC to say this. I love how he keeps blaming Mark Dow. Poor guy.
I'm open-minded.
It's fine. I get what you're saying. Smart people tell me things are possible all the time, but let's see it show up in price before we make that bet. We're just not seeing it yet.
Guys,
right, but I'm thinking through the possibilities, and that's a valid argument. Like, I'm not going to just dismiss that.
Correlations can always dislocate, right? And we can always have divergences, but it's not the bet I want to make, especially when, the dollar was everything last year, right? That was the call. Dollar rolled and then stocks ripped. That was the bottom. I'm not ready to throw it out that quickly.
So I know that the S&P is getting back to where it failed, where the bear market rally failed in August.
Yeah.
I think that stocks are innocent until proven guilty, especially if economic data does not soften, if the Fed keeps doing what they project to do, which I guess changes every day. Well, whatever. Disregard that. But my point is, I think that people are going to have to chase. If stocks don't pull back, people are going to have to chase, and I think the paid trade is higher.
Listen, and when we look at the weakest groups, whether it's value or cyclicals or the banks or the ARChy stuff, small caps, stuff that we want to play catch up, they might not be going up and participating very much, but they're not falling. They're not breaking key levels. Like, these indexes are holding where they need to as the rest of the market trends well. They're just stable, right? So do they rebound off these levels? I think there's a higher likelihood the longer that they hold these key levels. You could look to the 2018 highs for a lot of the stuff, whether small caps, financials.
I think the poster child of the junk, at least for me, was Zoom, which might have just had a failed breakdown. It's been hanging low for a long time. Got the shit kicked out of it after a really lousy earnings report. It showed like 3% revenue growth for a growth stock is not very good. But that's come back. And so if these names can't go lower, I think you got to consider the fact that they might start to go higher.
It's funny you said that. My sort of bellwether, my gauge, my poster child of those is PayPal.
Yeah, I was just gonna say that. Yep.
So also really interesting. I don't disagree with your Zoom look. For me, it's more PayPal, but yeah, that's what it is for me. Before we let Batnick go, NBA Finals.
Holy shit! So
yeah, I wish Batnick could stay for recess. That's really what we need him for.
Bring him back.
I'll keep it quick. So I have not faded the Heat. I bet on them to beat the Celtics for the series, not because I thought they were going to win, but they were like plus 430, which made no sense to me. So I parlayed the Celtics and the Nuggets to meet in the finals, and I'm pretty much all in on the Nuggets in 6 or less. So I was not too thrilled with the game on Wednesday. However, all credit in the world to Spo. That guy's obviously the best coach in the world. The roster is trash. Gabe Vincent is looking like I don't know, somebody who, a lot better than he actually is.
How is their roster trash?
It's not, dude, stop. I'm not having
it. In the NBA Finals.
Because Spo
remember the Knicks had a deep bench?
They did. We lost quickly. Julius had ankle surgery. Anyway,
sucks.
I'm not hating on. Listen, I'm coming here to be nice. I'm not hating on the Heat. Respect the hell out of them. I still think they're going to lose.
You called their roster trash.
The roster is trash. It's not a good roster.
How is it trash in the NBA Finals?
Did you go to some games this year, Mike? Were you at the Garden?
Yeah, I hope so.
Right?
I went to the Heat. I went to the Heat Celtics game actually.
Really?
Yeah, I was in Miami a few weeks ago.
Nice.
Thanks for texting me.
It's a nice arena, right?
No, it's garbage.
Oh, come on.
Garbage. I walked in and I was like, "Are you kidding me?"
Hater.
It's horrible. That I will hate on. The arena is trash. But
Are you serious? Right on the water?
I have one more nice thing to say. The crowd was much louder than I thought. Much louder than I thought.
Yeah, I thought it was fun.
Because on TV it looks empty. It is empty all the time. But anyway, all right, I'm getting the rug.
All right.
Thanks, guys.
I always rely on you for shows. You watching anything good these days?
I'm pretty dry.
Air last night, that Nike movie, I thought it was pretty terrible.
What?
You liked it?
I loved it.
Oh, it was cheesy. It was too much. It couldn't have happened that way. I don't believe that story at all.
Well, I don't watch movies for the factual story, but I loved it.
I love Ben Affleck and Matt Damon, so I did enjoy that. Anything else good? Anything else I should watch?
I'm dry. I am bone dry. Fubar is fun. It's like True Lies. It's like silly nonsense.
Fubar.
It's Arnold on Netflix, but no, I'm dry.
All right, I got one more before you go. Excited for Future Proof 2023. Just going to throw this out there. Morning show live every morning. Me and JC got you. So just
hell yeah. I'll hop on with you guys.
Cool.
Good.
All right, Michael Batnick, Ritholtz Wealth
Batman
Management.
and Redman. I'm going to be backstage, so I don't want to hear any excuses.
All right, fellas. Thank you.
Thanks, Michael.
Appreciate it.
All right, guys. We got Kimmy Sokoloff here. She joins us every single day to talk about what she traded yesterday, what she's watching this morning, because she does live trade the open every single day. Let's get her on the show right now. What's up, Kimmy?
What's up, guys?
All right.
Kimmy the Tiger. Whoever writes that on the side.
Get on her wrong side, and she'll you see that tiger come out. Right? She's all smiles and giggles around here, but get on her bad side.
I'm a New Yorker.
You got that New York in you.
Yeah.
All right,
Oh,
markets
yeah.
are flat. Dow's flat. S&P's flat. Nasdaq's flat. You had a killer close into the week, into the end of the week last week. Are you going with this? Do you believe in this S&P breakout? Are you looking for stocks to go higher, or are you fading this for a mean reversion?
Well, listen, obviously I trade, right? So this is my trading account versus my longer term account. I've had, like people in the room know, my longer term account, I had SSOs on since like 46, and I kicked them out around 53. 20 or so. The end of last week, it did go higher. I said that the S&P could go to 4,300. So if you want to keep them, I said, but I'm good. I'm going to take my profit. I've been in them a while. Doesn't mean we can't go high, of course, but I'm just taking my profit on the long side because I've been in it for a while. And it's 2 times, SSO, which is aggressive trade, So I just, kind of like, last week we had tons of names. I mean, we were just like flying left and right. Yesterday, not much excited me. I was kind of like, I'm like, all right, let's try this. Not moving, I cut it. Like I cut a couple of things within 20 cents. I was like, not moving, boring, out. You know what I mean? Like yesterday just wasn't a lot of momentum. At the end of the day, usually before I signed off, I let them know about STLD, like around 98.15. I said, hey guys, if you have an interest, look for a move to 99. It did pop and then pulled back in. So if anyone took that, I think
any shorts on your radar? I'm looking for a short, some short exposure.
Yeah. I'm going to watch Apple. I'm going to watch Meta.
And then what? Short Apple against 180?
Yep. Short Apple against 180.
Well, if it's above 180, you can't be short, but below that, looking for a mean reversion down towards
maybe
what, 175?
176, 175.
Yep.
Meta below 270, maybe down to 265. We'll look at Qualcomm too, because it's had a nice move. These are just like pulls in congestion, like kind of,
All right, I like it, Kimmy.
We'll
I like
see.
that a lot. I like those
It
short
goes on.
ideas.
I'm not like, last week it was one after another. We had a great week. It was like 4 or 5 trades a day. It was great. Made money every day. It's just kind of like, I'm kind of like, let's let the market pick a direction, kind of. I mean, it'd be healthier if the SPYs pulled back down to 423. We're outside the Bollinger Band, which I do look at. I mean, it could ride the Bollinger Band high and keep going, but it'd be healthier if it pulled back into like 422.90, 423 or so, and then see if it starts pulling in more and then flag in maybe next leg up or something.
And for those people wondering, we're trend followers here, most definitely, particularly Strazza and I, for our more intermediate term time frame. But I have a day trading account where I follow Kimmy's trades, and Kimmy specifically talking about day trading, where it is a mean reversion strategy, right? We are looking for her specifically looking for overbought conditions, towards the upper band of the Bollinger Bands, looking for that fade. So Apple's in a long-term uptrend, 100%. Right. So what? We're looking to short it. Last week or the week before that, NVIDIA was popping again, strong uptrend, all-time highs, first $1 trillion semi. We made money on the short side, right? So that's the strategy. And money's made quick on those mean reversions. So if anybody's wondering out there, why is Kimmy shorting Apple? You guys are saying such good things about it. Well, it's a nice risk reward to the downside.
That's right.
Yep,
well, great.
Like it.
Yeah. So we'll see what goes on today.
All right. How can they reach her, Spencer?
It's down. Where's my finger? Right. See where my finger's pointing on the screen? Right there. You can there's an email and a number. Email the email, call the number, and Mary will tell you how you can join Kimmy's room. She's live trading the open every single day. She announces her trades, but it is a premium service, so you have to email or call to figure out how you can get in. Thanks a lot,
That's
Kimmy.
right.
Thanks, Kimmy.
Guys.
Go
Have a
get
good
him,
one.
Tiger. Go get him.
Bye, guys.
All right, good luck today, Kimmy. Hey, it's 9:20. I just want to add that Coinbase is just continuing to sink here.
It's gonna get rocked.
Yep.
Totally.
Continuing to make new pre-market lows of the session.
Listen,
Shame on the SEC. Shame on the SEC. Coinbase did everything that they could possibly do to get some clarity. The SEC let them go public, and now they're breaking balls. Like, shame on them.
Dude, this is downright un-American, and it's a disgrace.
It's a disgrace. Yep, there's no question. Can we talk about the chart report? I got to hop in a couple of minutes. But
Shoot.
Are we getting P. Diddy coming on today? Is Pat on?
Pat's coming.
Yeah. Pat should be. He should be coming on
For a hot second there, I actually thought you meant.
Well, yeah, he did. RP did. But he was talking to me yesterday. He pinged me. He messaged me last night. He goes, "Is it too soon to talk about failed breakout in Apple?" So that reminds me of your and Kimmy's conversation.
I love Kimmy's trade. In fact, I figured she was going there. Right?
Yeah. Okay.
All right, chart report. Here we go.
Yeah, let's do it. First of all, I'm stoked about the David Lundgren interview. I'm a huge fan of his. I haven't had the chance to watch it. Super excited. David Lundgren was at Wellington for a long time, and now he's managing his own hedge fund. So very much looking forward to that. Shout out to Pat for getting that. Great get.
So JC, JC is talking about David was on Trend Lines over Headlines just last Friday, so you could check that out on the YouTube channel now, and you could watch him. We're gonna have a conversation with him on Friday in the guest speaker slot here.
It's true. Okay, so this is the chart report from yesterday. I want to scroll. Unless you want to talk about the chart of the day, I want to scroll to down to
talk about the chart of the day. I mean, is this a top,
Sure.
and what does it mean? Right? Like, we've been watching this pattern, this distribution pattern in Bitcoin for months now. We got a little failed toppy, a few weeks ago. This looks like a resolution to me. What's your take, JC?
Yeah, I don't think it's the top. I think it was a top, right? Former support turned into resistance, which is perfectly normal. I don't necessarily think that this is this massive distribution pattern that's going to be the end of this like epic cycle. I don't necessarily see enough evidence of that. I'm very curious to see if it's able to recover, start getting back above 27. That's what I'm mostly interested in. I don't necessarily care how low it goes. I'm mostly interested in how quickly it can get back above 27. That to me would be a nice entry, from the long side. So I'm watching that.
I'm looking for some stabilization here in the coming days, and I'll be adding to my Bitcoin position if we stabilize above this base breakout level, about 25. That's really where I want it. I'd like to see it hold there. If we drop back in the box, I'll probably be a little bit more patient and buy strength out of that range. So let's see.
I wanted to comment. I want to scroll down and just look at this one. Just checking in on an old friend. I thought it was funny. This made me chuckle.
Listen, these things got absolutely decimated. And if you look at some, like for the hot corner segment today, we're going to talk about M&T Bank. If you look at some of these, you now have like almost 3 month little basing pattern shaping up. And you can kind of see that structure here in KRE. They probably need more time, right? They probably need more time to build out some real constructive bottoms. But this is a step in the right direction. They've stopped falling for now.
And to Batnick's point, if small caps are going to get going, regional banks can't be collapsing.
You need banks to stop failing. And I really think that comes down to the Fed and what they're going to do in these next few meetings.
No love for my Bad News Bears t-shirt? No love?
Well, I was going to ask you about it. Just so much good gear on here. What is that? Is that like a Da Bears t-shirt? Is that like...
Are you too young for the Bad News Bears?
No.
You remember them?
No, I don't.
Burt Reynolds?
It was a TV show.
Oh, right? Man. Are you kidding me? Come on, guys.
Wait.
No.
You never watched the Bad News Bears?
Yeah, yeah. Was it Burt Reynolds? That's what I'm asking.
No, it was not Burt Reynolds. What are you talking about, Burt Reynolds?
That sounds right to me.
No,
The
man.
bad news. Oh, it was Walter Matthau.
Walter
Okay,
Matthau.
okay, all right. Sorry, jeez. Oh,
I wasn't too old for grumpier old men.
No, man. Come on. Bad News Bears? Oh,
also,
you guys
also,
suck.
they
You
rated.
guys are much young. How old? You guys are what, 10 years younger than me?
Well, no, I just want to say that they made a remake in 2005 with David Spade.
No, man. That's some bullshit. You got to go back to the 70s. Buttermaker. You know, he was cleaning pools. No?
Nothing.
All right,
check-
come on. I was on the right track with Burt Reynolds.
Burt Reynolds?
It was a show or a movie?
Both. I can't with you. I got to go. All right, guys. Love you guys. Spencer, tell everybody where they can find the chart report. Tell them where they can find last night's conference call. You guys have a great show. Thank you, everybody, for being here.
JC, we'll see you in a few days. JC and I are going to be out off this show for the next couple of days, but JC will be back on Friday.
Can I call in? I want to call in.
Yeah, of course you can.
Yeah, I'm going to call in. We'll talk about it later today. All right, guys. Adios.
All right. Guys, the QR code on the screen. Let's see if JC can leave. There we go. He left. The QR code on the screen is for the chart report. It's a free daily note that compiles the best charts and trading wisdom from around the world of finance. Use that QR code on the screen or the link in the description on YouTube to get the chart report for free every single day. Hot corner. We didn't get to that yet, did we? You want to run that?
I got some things to say. Yeah, let's do it.
Oh, it's so hot right now.
Hot corner. So hot right now.
All right. Just reviewing one of these last filings right now. Shout out to Alfonso. He does such a great job helping me with this every morning.
He's a beast. Alfonso is the glue guy. He's the glue guy of this show. He keeps the show glued together.
Yeah, just so everybody knows, shout out again. Alfonso is the chart ninja driving all these charts, and I don't know how he stays so organized. We got thousands of charts that we're throwing around every morning here, and he knows which one to drive to. So not an easy job. He's obviously mastered it in just a matter of weeks. We got some good ones today. Let's start here with Stepstone Group. This is an asset manager. They're based out in New York. I remember these guys from back in the day. $2.2 million. They're head of strategy. I think he's also a director of the company. He's got some money. So $2.2 million, not insignificant at all. Big purchase. Let's throw up this Stepstone chart. We have it here.
We do.
Score. I do like this setup. Now let's talk about it, right? These are the types of stocks that tend to see insider buying, right? They're buying on weakness. They think they're getting a deal. Insiders don't tend to come in and buy shares on the open market in the middle of a massive uptrend or a rally, right? They buy on weakness. It's stuff like this. These are the stocks that come onto our list, right, with current buying. This doesn't look like the bases that we've talked about. It doesn't look like if you go listen to Lunch and Learn from Friday, you would say, wait, we're not buying this one, right? You're right. But we're also not selling this one, and we do have to be open to the fact that stocks like this that have been beat up, if we do get that rotation that we keep talking about, right, into the lagging groups, you're going to see some insane catch-up moves there, right? This is a candidate. We can define our risk really clearly. If you look to the left-hand side of the chart here, we have the IPO lows from late 2020, which line up almost perfectly right around $23 with pivot lows from last year, right? If we're scooping back above this level, and look at the momentum divergence, right, on these incremental lows throughout, April into just last month, momentum's diverging higher, right? Making higher lows, staying out of oversold territory. Now it's at its highest level almost of the year momentum. I think you could buy strength in this name above 23, target those pivot highs at 31. That could be a really nice trade. And while it's a lower probability setup, it's also very high risk reward setup. You know exactly where you're wrong. You can be out immediately on any sort of give back, and it probably achieves its target pretty quickly, right? If we are right on this trade. So I'm open to these like counter trend setups. This would be a good example. JC mentioned PayPal. Batnick mentioned Zoom. All very similar setups. There's a lot of them out there right now. We don't want to be shorting the weakest names. If you have a little bit, more risk tolerance than most, you could, take some flyers on these setups. And, depending on the broader market, some of these are really going to work, I think. Here's PayPal, right? A scoop and score. We could buy strength back above these pivot lows. I like buying strength in these setups because the stock has to prove itself to us first before we get involved. This one even popped up on the hot corner list not not long ago. August 18th, 75 calls on the offer. Yeah, because of options activity. So that was interesting. Let's go on down the list here. We had one more. I want to talk about M&T Bank, right? I think we had CFO activity in MTB.
Yeah, I saw that. Let's bring it back up.
So CFO spotlight here. When I'm looking through these lists every morning, I want to see a CFO buyer more than anything. Had that here, 1.2 million. So he's buying in size. It looks like he waited. He waited for the dust to settle. CFOs are probably the best insider buyers when it comes to executives. Look, you got a nice little short-term base here. Again, scoop and score back above those pivot lows from 2021, 128 and 3/4. Little short-term continuation pattern, right? If it doesn't resolve lower and it's resolving higher, you get that fail and probably a nice reaction higher. So M&T Bank is on my list of regional banks that are really shaping up and might be actionable soon. Love to see the insider buying, especially coming off such weakness so far this year, right?
So I know the hot corner pays attention to insider buying because there's only one reason to buy and a million reasons to sell. That being said, is there ever a scenario where you would note an insider sell?
Stuff like when Musk was selling, in size last year, or even Bezos. When Bezos was selling, like you couldn't even look at it and say, oh, he wants out of the stock, right? And that didn't matter. I think it was like related to the divorce.
Yeah.
But it's more an issue of if those guys are sellers in size, it's going to put pressure on the stock, right?
Mm-hmm.
And typically they'll be selling in some sort of a, plan, right? Where they're selling over long courses of time, and it'll put pressure on the stock for, a long enough period that it's very material and we should pay attention to it. So it would be more that, right? I'm not looking at the sellers saying, oh, they don't believe in the stock anymore, right? Because they have all sorts of reasons to sell. It's not my job to figure that out. I think that's a risky game to play. It's an exercise of utility. So say more, if they're big sellers, we need to be aware because, of course, there's too much supply there and it will drive the stock price lower.
All right. The Hot Corner, from Washington to Wall Street to the boardrooms themselves. The Hot Corner covers all the biggest moves from investors that have the best information. Sign up for the Hot Corner and get this list delivered to your inbox every single day for free. Yes, I said it, free. You can get it from the QR code on the screen or from the link in the top of the description of this video on YouTube. We talk about the Hot Corner because it's important. We do it every day on the show. All right, 9:33. So I have to confess, I don't actually know if Patrick Jonawilla is going to join us today. Normally, he's in at around 9:40 or so. It is early for him. He may be sleeping. I'm not quite sure. But we'll play it by ear. How about that? I do want to say one thing. Oh, Pat is here. Yeah. Oh, look at that. I didn't even see him. He's here. He's backstage. My mistake. Look at Pat. All right. Pat's he's not quite ready yet, so we'll go to him in a few minutes. I do want to say there was a comment in the chat earlier. We were talking about movers, and we missed one. Thanks for the reminder. Unity, ticker U, was moving because they got mentioned yesterday in Apple's presentation a lot. Yep.
So they're an app maker, correct?
Yeah, I have to confess, I don't actually know what Unity does. I can tell you. I can read you a description if you'd like.
I mean, this was a hot IPO a few years back.
It was very hot.
About this one. So still a large cap based on traditional measures, 11.6 billion. Look, the base is shaping up. There's the chart. It's not the cleanest, right? I don't love the fact that the August highs are so far away, but you can define your risk here in the low 40s, right? At the year-to-date highs and the Q4 highs from last year. So it might be actionable soon. Not the cleanest base, but it's the right structure, right? It's shaping up. It's getting there. This looks like a stock that has been going sideways long enough and wants to start moving higher. I'm really not going to feel comfortable that a new markup phase is underway, though, until we get confirmation at those August highs. So I think you could trade it from the year-to-date highs to the August highs, but it could still be messy, right? There's better bases.
Yep. So that was the one mover that I wanted to cover that we didn't. Oh, you know what we didn't do? We've got to talk about earnings, man. Do you want to cover earnings? Because we do have a couple. So we can give Pat a few minutes here to get ready. All right, let's do some earnings.
Charts. Listen, we could talk about whatever. If you got stuff, let's.
My mistake. We got so excited talking about Apple. I totally skipped over earnings. We had a couple here this morning. Let's get the calendar up on the screen. There we go. You can see Sienna, JM Smucker, Thor Industries, and then actually we had GitLab, which I chose not to include on this, and that ended up being like one of the biggest movers.
Biggest mover of the day.
Yeah, but it was such a small company. I thought, who cares about GitLab? Well, people care about GitLab apparently. So anyway, GitLab's numbers, their EPS beat, their sales beat, and last I checked, the stock was up like 20%, 30% almost in the pre-market session.
Yeah.
So, oh boy,
one really interesting chart. It actually, Spawns, let's try and get this chart up, right? Because it looks a lot like, there it is. It looks a lot like the ones we've been talking about, right? So this doesn't have today's candle. It's up 25% today. Right now, trading about $44. But look at how it scooped below, violated the pivot lows, right? Key support there just in April, hooked higher, set up with some sideways chop now above that former resistance, now turned back to support. And now you're getting the gap up and the positive reaction right after that key level was reclaimed. These are the patterns that I'm talking about that can really, really be some big wins, I think, in the coming weeks and months if that rotation comes underway, right? This is exactly what we're talking about with STEP.
Yep, you're right. I mean, the charts look extremely similar.
Yeah,
extremely. And then the other one I wanted to highlight here was JM Smucker. We talked a little bit. We talked a few weeks ago about food stocks and how they're able to just like pass the inflation through to their consumers so easily. So JM Smucker, they beat on the top line, they beat on the bottom line. I don't know if how much the stock is up today. I can probably check. But
this is one of those just slow and steady staple stocks. If you zoom out enough on this one, monster base. The 2016 highs come in right around 156. Yeah, 157. That's really the level. Got to get above there. Here's the problem. I don't know if we have a staples relative chart in the deck, but you guys are probably aware of it. You've heard us talk about it. There has been a massive unwind in defensive positioning. By that, I mean investors just fleeing away from the safest stocks over the past month or so, right? I don't want to be in a staples name, even if it's a strong staples name with a chart like that, in an environment where investors don't want those stocks anymore, right? So we're seeing them cycle out of these, risk off. Here we go, right? Look at this. We moved steadily higher staples on a relative basis for about 3 months, starting in early February. And then that all came undone in a matter of like 3 weeks, right? And this bearish distribution pattern was completed. And now this is telling us that over intermediate and longer term time frames, staples are going to continue to underperform. So until this chart shapes up and repairs this damage, which I don't envision it doing based on what we're seeing from the broader market, just not interested in staple stocks, right? That time passed from February, March, April, staples look good. We were talking about them. It's no longer time.
You're right. I feel like only one can be in favor, staples or tech. It can't be both.
It's you know what I mean? Like, are we in an environment where we want to move out on the risk spectrum into the more techie stuff, more speculative stuff, or are we in an environment where we want to in on the risk spectrum? People are moving out, so that's the trend. Don't fight it.
All right, P Diddy, you ready?
P Diddy,
thumbs up for me if you are. Hey, look at that! All right, let's get Pat on the show. Should I I'll replay the chart report bumper because why the hell not? It's a nice.
Please,
it's a nice little bumper.
That's what I'm here for.
Hey, what's going on?
What's happening?
What up? What up? What up?
Patrick,
I love that bumper. What's up?
What time is it over there? 6:30. You took the morning train to work today? Did you sleep?
Yep, took the morning train.
All right, good. All right. So we had Batnick on this morning, kind of talking about sentiment. I thought he made a great point, Spencer, about how it's easy for us to get lost in this world of thinking everybody hates everything, because that's just what we're seeing on Twitter. He made a good point, Pat. Like, most people probably don't hate this bull market. Those are just the ones that we hear from the loudest. What do you think? Because you're on Twitter more than anybody.
Well,
How do you, like, manage that, right? Like, how do you discount what you're hearing on Twitter and not let it cloud your mind too much?
yeah, I think that's a really good question. Sentiment is one of those things that's really only useful at extremes, right? When it's kind of in the middle like this, when it's hard to read, it's not as important, right? It's really useful at the times when everyone's on one side of the boat. And if it's not obvious, then it's probably not as important. I won't say it's unimportant. And sentiment's one of those things that also kind of works in different time frames too. You could be short-term overly bullish. You could be long-term overly bullish. And I think we're probably coming from longer-term levels of washout from what we saw last year. So that's probably something to keep in mind.
Totally.
But it's like that Walter Deemer quote, I'm a platitude pad over here, but if you need a sentiment indicator to tell you that sentiment's at an extreme, it's not. So that's kind of where I think we're at with sentiment right now.
Right, so let's put this into context. We were at an extreme Q4 of last year.
Yes.
Okay.
Yeah. By I think any measure, there's so many, it's kind of hard to quantify sentiment. You could look at the surveys, some of the drawbacks there, are people doing what they're saying? But I think anecdotally, probably that's the best evidence you got. And I don't have to tell you guys some of the bearishness we saw last year and just people's general feeling towards the market and fear.
For me, like, this market really, as much as people want to complain, everybody's a breath expert, right? We're back to one of those environments. I feel like it happens every few years, Pat. And it's fun.
Yeah.
But it's like, is there not something for everybody to kind of be happy about in this market? So, like, let me just break down what I mean by that. Like, if you're a stock picker, you should be doing fine, right? There have been plenty of opportunities. There's a million tech and growth stocks with these beautiful bases. There's a ton of them that have been working all year, hitting first price targets. Now we're hitting secondary price targets on a lot of these leaders. If you're a stock picker, there's been plenty for you, right? This year, even last year. If you're not a stock picker, you're probably in the indexes. And good God, you couldn't ask for a better breadth profile, right, to be in the indexes than right now. All of the biggest stocks that drive the indexes are killing it, and it's really, really hard to beat the indexes. I saw a chart that showed the percentage of S&P 500 companies that are outperforming the S&P this year, lowest level in like 23 years. You got to go back to the or something. So, like,
yeah, I know what you're talking about.
You're doing great too. If you're a stock picker, there's something for you. I don't know. I think there's a lot for people to be happy about. So,
yeah, a little something for everyone in that kind of environment. I think that's probably a good point.
Just not crypto, maybe? Nothing for investors right now?
Yeah, we used that for chart of the day yesterday in the chart report. And, it's testing that 25 level. And if it doesn't hold that, there's not much support until like 20,000, right? That's another 20% decline. So, but I think it's interesting. If you look at that chart, it's kind of got two head and shoulders patterns at play. One inverse head and shoulder on the bottom, and that's the big one.
That's right. And
then it has like a kind of a shorter term one that it's resolving lower from right now. So you kind of have these two conflicting patterns at play, and it's all, the battleground is that 25,000 level. So it's at an inflection point. We'll see.
I would argue that they're not conflicting at all, right? Because markets are fractal. We see this all the time. You got the inverse head and shoulders resolving higher earlier this year.
Mm-hmm.
And then on that, reaction higher, it formed a little short-term distribution pattern. And now I think it would, be very logical to see that distribution pattern is resolving lower, and you get a retest of the initial reversal pattern, the bigger inverse shoulders, right? So I'm looking for a retest of this 25 level, and I'll be a buyer if we stabilize here and move higher.
Yeah, and what you were just saying reminded me of something I was talking about with David Lundgren on our episode of Trend Lines Over Headlines last week. Yep. He brought up this great chart, and I actually it didn't really click with me until I watched it like a second or third time. But it was this chart of the NASDAQ in 1999, obviously just going parabolic, right? And then on the lower pane, you had the value line geometric index, right? So the median stock, what the average stock was doing. And he was talking about it in today's context where you have a similar bifurcation, right? You have tech stocks just doing really well, very concentrated leadership. And then you have the median stock. You've been looking at the value line, pretty much same level it's been at in 25 years, over the past 25 years. So he was making the point that in 99, while the NASDAQ was going parabolic, you had a stealth bear market in the median stock. So the value line went down 20%. Meanwhile, these, hot tech stocks, these .com stocks were flying. So, what if we saw a similar scenario where Apple, Microsoft, NVIDIA's, they all keep leading and keep bifurcating while we have this really pronounced weakness in the average stock in the broader market. And, I think something similar kind of happened in the 60s with the go-go stocks where the indexes didn't really tell the full story. So if you're just looking at the S&P here, or if you're just looking at some of these indices, it's probably not telling the full story. And, you just got to go with what works is what David's point was. And stop kind of asking questions about what does A mean for B, just trade A kind of thing. You know what I mean?
Yeah, just buy big cap tech and other tech stocks. Is this a failed breaky in Apple? Okay.
I think that is an interesting question, right? And the reason he's asking that is, of course, because we hit an intraday all-time high on a daily closing basis. Yeah. First of all, we got the weekly closing basis for Apple all-time high last week, right?
Sell the news event too, right?
Right.
Announcement yesterday. Now it came and the stock sold on it.
Right, and it's funny, I didn't even know there was an event coming up, but so we got an intraday breakout on a daily basis yesterday, but then sell the news event, as Steve said, rolled over and actually ended down on the day. I think it was up to almost 3%, I want to say, intraday yesterday, but ended down. So pretty nasty reversal there. But what do we call that? Do we call that a failed breakout? I mean, technically it never closed at an all-time high. If you look at that thing on a line chart, it still really isn't a failed breakout because it didn't break out. But it did. And that was a nasty reversal, right? So I think at this point you just chalk it up to Apple's finding resistance at its former highs, right?
That's right. It's finding resistance at a very natural level of overhead supply. I think it's less about, we just barely made a new all-time high intraday, and it's more about just that general level that we're at, and now the last two candles. So we had the bearish candle yesterday, which really means nothing without follow-through, and today it looks like you're getting it. Listen, it's 18 minutes into today's session, right? So let's be patient here. But if Apple closes today looking the way it does right now, down 80 basis points, that's bearish follow through, and you probably do get some corrective action, some sort of a corrective leg here.
Yeah, and I think it's important to keep that weekly basis in mind and kind of just be patient and wait to see how we close the week. Do we get back below those highs on a weekly closing basis? That would probably make me more ready to call it a failed breakout than where it's at right now.
It's tough, right? You want to basically what you're saying is be patient with the stock. It's been strong. Zoom out a little bit, right? Give yourself that context of just how strong this trend is. You don't want to really bet against stocks that look like Apple, right? There's probably better shorts out there. And if you look at how some of these other big tech stocks have corrected and really held their gains in such a resilient way, do we really want to go doubting Apple? For me, it's not for me. I get it. Kimmy will probably make money shorting it today. Short-term swing traders could probably make money on some sort of corrective leg here, but there are easier trades to make.
Yeah, I would agree with that. And you talk about sentiment. Even my own bullishness towards it, I think maybe people got a little too far ahead of themselves. I mean, the amount of people just itching to call it an all-time high yesterday, intraday before it closed, the amount of all-time high Apple charts, and we're all guilty of it. I mean, it is a big deal, right? Like this thing is bigger than the Russell 2000.
Yeah.
So in a way, you kind of got to weight that just as much, if not more, than something like the Russell 2000 when we're talking about, assessing the broader market.
Because I call bullshit on that whole take. Like it.
Okay.
JC says the same thing. Like, oh, it's so many companies in one. Yeah, it's like 4 different companies in one. The Russell 2000 is 2,000 companies. We use it for information because it tells us about the performance and the health of 2,000 companies. Apple, I'm sorry, guys, is still one company, one very important company, and it's going to drive the indexes, right? And have a huge impact on the things that we look at every day, like the S&P and the NASDAQ. But the Russell 2000 moving higher, probably a lot more constructive than just one stock. Is that fair?
I would agree. I mean, I'm trying to. I guess I'm making a bit of a exaggerated point here. Like here, do you guys have the chart report, Spencer? Are you able to pull that up?
Yeah, I got it right here. You want yesterday's?
So if you
run the bump.
if you scroll down, if you scroll down to Urban Carmel's tweet, I think it's probably the 4th or 5th down. Right there. Yeah. So, and this is kind of what I was talking about here. You know, if we're talking about small caps, the S&P 500 is 80% of total U.S. market cap, and Russell 2000 is about 8%, right? So, but I get it, Steve. In terms of like the overall health, right, the total health of a market, you probably want to be looking at more diversified companies, right? Not just tech-ish companies. You're right. I see what you mean, Steve.
Here's the problem. Just like a lot of arguments about trades come down to time frame, this kind of argument, and the same with breadth, comes down to what is your goal? What's your objective with this information, right? If you're trying to say, hey, doesn't matter for most of the broad indexes and, you know, funds that are long equities, you're right. You know, small caps not performing, like it says, 8%, it's not going to be the biggest deal. If you're trying to assess like the health of the broader market, right, it does matter. So it's like, what is your goal with this information? It's really a question of that.
Can we just agree that everything matters, right? So to use the dog tail analogy, the tail is still part of the dog. Tail matters, right?
That's good.
Tail doesn't
Spencer
not
keeping
matter.
It real.
The tail doesn't not matter, right? It's still part of the thing.
No, that's good. I like
that.
Right? Everything matters.
Dog needs his tail.
Thank you for keeping it real.
The dog needs the tail. Without the tail, what will it chase?
And he just got a little knob wagged back there.
And by the way, shout out to Frank in the chat here for mentioning that little stat about June seasonality for Apple. Yep. He says June is seasonally the most bearish month for Apple. Someone double check him, but I would agree at first glance probably, but what's up?
Nothing. Yeah, so seasonality, interesting stuff. I got nothing.
Okay. All right. Should we go into maybe a little early to go to recess?
I don't have much for recess. I don't want to go into recess yet.
You don't have much to recess about, Steve. That's a first. What about golf?
Because I'm talking about stuff every day. I mean, I can't watch a new movie every day or read a new book.
Yeah, but you've been golfing. I mean, for a while there, you were going every day.
I know. And then I got busy and took like 2 weeks off, but I did get out yesterday and played.
Just to look at the market here, we've talked about Coinbase, talked about GitLab, G3 Apparel, GIII is the other big mover of the day.
Isn't MongoDB up big on some sort of upgrade today?
Is it what?
MongoDB.
MongoDB. I did not.
Great information, but this is what I'm talking.
How about that move in Coinbase? You seeing that?
Yeah.
Listen. I'm done with Coinbase. Got to get out of this stock. I'm not going to get out here today. But again, my take on this is it's like energy stocks for me. I don't want to fight the government. I don't want to fight the SEC. I don't want to be in a stock that the government, wants to mess with or doesn't even want to exist as a company at all within our borders. Like that's a tough game to play. I didn't think it would get this bad between Coinbase and regulators. But at this point, it looks like they're not going to quit until this company just goes away. And it's a shame, but I can't. That's just a waste of capital. If you're in it now.
Well, Steve, what exactly is going on? Could you just fill me in and probably some of our listeners too?
They got sued by the SEC. We already talked about it on the show. They're coming after Binance and Coinbase. They're very different situations, but it looks like they're treating them almost equally. They don't want these companies to exist at all. They shut down Silvergate and SBNY, and I'm worried that
that was a different thing entirely.
It wasn't at all. It wasn't at all different. That was a part of the war on crypto. If you talk to people who were in those boardrooms, that was 100% a part of the war on crypto. They used the regional banking crisis as an excuse to step in and make that move. It was a very opportunistic move by regulators. Sorry, that's what happened.
Okay.
Wow.
Yeah. All right. If you say so.
No, so.
Let me look here. You mentioned MongoDB. There were no ratings today that jumped out to me. A bunch of boring upgrades. Yeah, no, nothing that screams. Talk about me.
You seeing this little relative strength move in small caps to start the morning?
Listen,
Russell 2000 is the only positive index.
Best day since November on Friday, close out the week last week. We're going to back and fill a little bit. You have those pivot highs from the past few months in IWM. If that level holds, I think we see continued strength from small caps, and that would be huge. You're seeing the bounce back off that level today. Like from a really, really tactical standpoint, it's about 179. I know we have the chart somewhere.
Was there a rebalance or something? I mean, there was some pretty high volume on Friday. What it wasn't month end on Friday, but
not sure.
Was there anything that could have caused that? I know S&P announced some index changes. I think they're changing Dish. They're taking Dish out, I think.
Dish is out. They put in a stock that we were trading. We just talked about it yesterday.
But like you saw, like RSP, right? Something that people have been looking at more than they ever have looked at the equal weight. It's obviously been lagging and stuff by a huge margin. That one had record volume on Friday. Record volume, highest ever. And usually when you see those massive, it's either like a capitulative move or there's some sort of rebalancing or something going on with the ETF or index itself causing that.
We could easily check rather than speculate, right? Information. So I don't know. May 28th, 2023, they undergo quarterly updates. Yeah, you'd have to check. It's something you can Google and easily find out. I'm not sure. So let's do recess, run the bumper. Yeah, 3. I could fill 3.
I got some recess.
All right, so I'm going to go first. Batnick disagrees with me. Have either of you guys seen this new Matt Damon, Ben Affleck flick that I was so excited about and then so disappointed when I saw it?
No, but it's on my list.
What is this, a Good Will Hunting sequel?
I want to see it.
I would watch that in a friggin' second. Air. It's called Air. It's about the story of Phil Knight and Nike. He was obviously a very interesting character. I think Ben Affleck did a great job playing him. But for me, as somebody who, it's not the first time I'm hearing this story, the Jordan Nike story. It was nice, but there were a number of times during the movie where I had to turn to my girlfriend and just be like, it didn't happen that way. This is ridiculous.
Okay, so question for you. Have you read Phil Knight's book?
Shoe Dog? No, I haven't.
Okay. So I did, and that's the reason I want to watch this movie, because his book basically ended with them getting Michael. So I look at this as like almost like the last chapter of that book. That's why I want to watch it, because it'll give more detail. If you have not read Shoe Dog, highly recommend.
Yeah, everybody says it's great.
I like almost cried at the end. Almost cried.
So it stops. The story ends before the Jordan deal.
It like the story. It ends in like, like the mid 80s or like early 80s. So it's like they signed, like they basically, he's like, and we signed to Michael, and then we all lived happily ever after. It's basically how the book ends. So
I'm just such a big fan of Michael Jordan, can I just say? And on and off the court, I mean, this guy is just incredible. And he absolutely changed the game, but he also changed the business, right? Forever. And they do cover that. And that part's really cool and I'll just tell the story really quick. In the past, when you did a shoe deal, you got paid. You got paid basically one lump sum. This is what you get, and that's it. Jordan is the one who changed it to, I want a percentage of sales. And the guy makes something like $400 million off it still. It's really just crazy. And that just really, changed the landscape for athletes in a way that they deal with corporations forever. And I think that's really important. I'm all for players and athletes getting paid as much.
All right, but bottom line, Air was not good. You didn't like it.
Movie sucked.
All right. My recess
Thanks for
is
2 hours.
Wait, what, Pat?
I said thanks for saving us the 2 hours of watching the movie.
No. I'm still gonna watch it.
I don't believe that Apple's not launching this thing for Christmas. I hear you all saying this in the chat, but I don't believe it. What a miss that would be. We'll see.
My recess is tonight. I'm heading down to Baltimore, Charm City. Going to be there for actually the rest of the week, and I'm very excited. I went to college in Maryland. Very excited to go. I haven't been to Baltimore in years.
Yeah.
Go back to the Inner Harbor, pick some crabs, see my college, maybe hit up DC while I'm there, see some friends, and
maybe meet some people and do some business things and work.
Do some business. Business will be done. Meetings will be had. But I consider Maryland my second home in a way. And so I'm very excited to head down there. And any Baltimore restaurant recs or bar recs.
No, I usually just drive right by it, so I got nothing.
Drop them in the chat. No, Baltimore.
Well, listen, if
spots.
If you're gonna be in Baltimore in the harbor area, there's a good sushi restaurant called Azumi. If you're going with JC, he'll know exactly what I'm talking about.
All right. All right.
Yeah, Azumi, Azumi or something like that.
All right. Noted.
Yeah.
Pat, you got anything?
Oh man, I'm going to be going away next week. I'm going to the Greenbrier Resort. You guys ever heard of that place? It's in West Virginia, but it's supposedly this nice resort. It's my dad's 80th birthday, so we're celebrating that with the whole fam, getting the whole family out there.
Where do you fly into for that?
That's my recess. So flying into Roanoke. It's a small airport.
Yeah.
Roanoke, Virginia, and then driving to West Virginia from there. So
nice. Wow.
Yeah. We'll see. All week with the fam, Can't wait.
Since we're all talking about trips, Sean and I are going to Asia for 4 weeks. We are leaving in less than a month. Yeah. I gotta go get vaccines and things. So I think we're booking Singapore and something else. Booking it today, which is why I'll talk about it on here for the first time. So that's going to be really awesome. Sean McLaughlin and I are head of options. They're shipping us all over to 8 different cities in Asia. We're going to tape a documentary out there, go meet as many traders and investors and technicians and analysts as we can, and just learn about the world and markets from a very different perspective. So
it's going to be awesome. It's going to be sick. All right, everyone, that'll do it for our show today. Thanks to Kimmy Sokoloff, thanks to Pat Dunawilla, and also thanks to Michael Batnick from Ritholtz Wealth Management. Thanks for watching. Thanks to everyone in the YouTube chat for all the comments and the questions and the corrections. We appreciate that. If you like the show, please hit that like button on YouTube. We'd appreciate that. If you're watching us on Twitter, hop on over to YouTube, hit the thumbs up. It takes 2 seconds, and then it does help us out. Stay tuned for Stock Market TV. We got a lot more coming today. It is Tuesday. We're doing CRL chart requests live at 1 o'clock Eastern time. We got Twitter Spaces with Pat at 11:30 Eastern time.
Yes, sir.
We got
join us.
Part of the price action here right here at 2 p.m. The Flow Show right here at 3 p.m. So we got a lot going on the channel today. Stay tuned for all of that. And it's past 10 o'clock. So everyone, if you haven't been trading, then I guess start trading. Good luck with your trading. Go make some money. We'll see you later. And thanks for watching.
Bye, everybody.
All right. Thank you, guys.
Run it. I can't take no loss. I don't even know what it costs. I hit the ground, then it go.